property, plant, and equipment. So property, plant, and equipment are tangible what assets. They are what tangible. They are tangible assets head which can be purchased or constructed. So it's either you purchase it or you construct it, right? So we can be they are tangible assets. Tangible. We have tangible and intangible, right? PPIS system is or they are tangible assets which can either be constructed or purchased by an entity for more than one accounting period for use in the production or supply of goods and or services or for rentals or administration purposes. So it is a non-tangible asset that which has been constructed or purchased, and your motive is to use it in the production and supply of your goods and services, or for the rentals or administration purposes. So your motive is not to sell the asset. You are not purchasing it or you are not constructing it to sell it, but then your motive is that you want to use the asset in the production and supply of your goods and what services. So and then it goes beyond one accounting period. So it moves beyond one financial period, more than 1 year, 2 years, 3 years, 4 years, 5 years, and beyond. What does it? Your motive is not just for within one particular year, but then you are going to use it in the production. That's the tool that will be in the factory, the machine, the computers at the office. All these are what the PPE. They are tangible assets which can be constructed for the purpose of the production and supply of what goods and what services. So that is what PPE is about. So intangible assets are not what PPE, right? Intangible assets are not what PPE. PPE are what tangible assets. That is what you need to know. And then it goes beyond one financial year. Motive is not for sale, but then you are going to use it in the production of your goods and services. Then we have PPE does not include PPE classified as held for sale in accordance with IFRS 5, non-current assets held for sale, and discontinued operations. PPE does not or PPE classified as held for sale in accordance with IFRS 5. It means any PPE item which has been classified as not for sale or not current asset held for sale and discontinued operations cannot be classified as what PPE according to IES system. Asset held for sale means that you are ready to sell the assets. You are going to sell the assets. But then the PPE is our motive is not to sell the asset, but then to use the asset in the production of goods and services. So any PPE item that you have classified it as held for sale, that you are going to sell it, and you have discontinued its operations, you are not going to use it in the operation anymore, but then you are going to sell it or dispose it, then it means that you are classifying it as IFRS 5, which looks at the non-current assets held for sale, and therefore cannot be classified as PPE IAS system. So that is one. Two, biological assets related to agricultural activity other than a burial plant. Biological assets related to what? Agricultural activity other than what? A burial plant. So we have some items used in the agricultural activities. We say that those items can also not be what? Classified as PPE. And then a burial plant. So what is a burial plant? Um, what is a burial plant? So a burial plant is plant that actually helps to bear what fruit. It's actually a plant that is a living plant that is used in the production and supply of agricultural produce. So we use it in the production or supply of agricultural produce, and it's expected to bear produce or to bear fruit for more than one period, for more than one period. And then recognition and measurement of exploration and evaluation of mineral resources can also not be classified as PPE. Mineral rights and mineral reserves such as oil, natural gas, and similar non-regenerative resources all cannot be classified as PPE, property, plant, and equipment, according to IAS system. According to IAS system. So yes, under IAS system, we have the recognition criteria. We have the recognition criteria. When do you recognize an asset as a PPE? When do you recognize an asset as a PPE according to the IAS system? When do you recognize that, hey, so you take this, let's say this food, hey, you are an asset, you are PPE. When do you classify it as what? As a PPE. What is the recognition criteria, the recognition basis, the benchmark that will guide you to determine that, hey, this thing is a PPE. A PPE. What is the recognition criteria? So that is the recognition criteria that you have. The recognition criteria. So an item of property, plant, and equipment should be recognized as an asset when, one, we have only two recognition criteria. It is probable that, if you could remember, under the conceptual framework, we gave three recognition criteria. That is, it should meet for assets, all liabilities, and then all the equity, and yeah, all the equity, yes. So we give the general recognition criteria, right? We give the general one, where I think there were three, right? We saw them. Where we said one was that it meets the definition criteria, right? And then the other two is what we have here. So one is, it is probable that future economic benefits associated with the assets will flow to the entity. It is what? It is probable. We only classify an asset as a PPE if it is probable that the future economic benefits, the benefit that this asset would provide, with the asset will flow to the entity. It is probable that the benefit will flow to the entity. There is significant evidence, if you could remember, significant evidence that the asset, the economic benefits associated with the asset will flow to the entity. All the economic benefits associated with the asset will flow to the entity. That is one of the criteria. So here, you can't tell me you are an accounting student and you don't know the criteria of each of the standards, the recognition criteria, or the measurement criteria. Hey, so that is what it should be on your fingertips when they ask you, what is the recognition criteria? Blah, blah, blah. I remember I went for some interview and then they asked me, I should mention the recognition criteria for any, is it 3 or 4 standards that I know? And then the person said, don't mention PPE. Don't mention for PPE, property, plant, and equipment. I know that one is easy because that one is the basis. So you can't be an accountant or an accounting student without the basis, without the recognition criteria. To the recognition criteria, one, it is probable that future economic benefits associated with the assets will flow to the entity. Two, the cost of the asset can be measured reliably. You know the cost, that the cost of the asset is, you purchase it at what, 20,000. 20,000. So you know the cost. It can be measured. Everyone knows the cost. That is the cost. Cost of the asset can be measured what? Reliably. You know the cost already. And then it is probable that future economic benefit will flow to the entity. If you close your eyes, you should be able to see the recognition criteria for these two, for PPE. You should be able to say these two criteria for what? For PPE. Then we have the measurement criteria. What is the measurement criteria? And you want to, They'll ask you what is the measurement criteria, what is the recognition, all the standards. Know their recognition criteria or the measurement criteria. So under the measurement criteria, we have the initial measurement and then subsequent measurement. Initial what measurement and then the subsequent measurement. Initial measurement and then. So what is the initial measurement saying? It is measured at its cost or the historical cost. PPEs are measured at what cost or the historical cost. That is the word initial word measurement. We'll come to the subsequent measurement to know what the subsequent measurement is also telling us. So let's look at the component of cost. So under PPE, component of what? Cost. What makes up the cost of a PPE, or when can we capitalize a cost towards PPE? So the component, what is made up of the cost of what the PPE? Purchase price. How much you purchase the cost? Do you purchase the what? Assets. How much did you purchase it? The purchase price less any trade discount. If you have given any discount, the thing is 100 cedis, and then they told you to pay 95 cedis. Then the purchase price is 95. The purchase price is what? 95, and not 100 cedis. You have been given a discount. So you deduct the discount from it, then the actual amount that you pay becomes the purchase price. So the component, of course, include the purchase price, the import duties. When you buy the things, you have to pay the import duties at the port, the port. You have to pay all the import duties associated with the property. So all the import duties you pay, that is also part of the cost. Directly attributable cost of bringing the asset into its working condition. Working what? Condition. Into its what? Working condition for its intended what? Use. So this forms part of the cost of an asset. Cost of what? A PPE. Cost of a PPE. Purchase price less any trade discount. Import duties, directly attributable cost of bringing the asset into its working condition. So, any cost that you incur to bring the asset into its function, the asset came for a particular purpose, right? So, that purpose must be what? Fulfilled. So, any cost you incur in bringing the asset into its intended use, its intended purpose, should be classified as what? As part of the cost of the what? Asset. So let's look at an example. Site preparation. You are coming to build a house. What did I say? You have to prepare the site. I said, oh, clear near money, you clear the land. What did I say? All the relevant, all the things that are not needed, you clear them. The cost that you incur in clearing them should also be part of the cost. It should be embedded when they tell you what is the how much did you incur as the cost of this property. You should be able to what? You should include that cost in addition. What I say? So that's what they capitalize. Capitalize means you add that expense. When you say capitalize, brofo no mind is a capitalize. You just add. Capitalize means add. So site preparation, delivery cost. Yes, cost of bringing the assets, all the cost, delivery cost, installation cost. When you brought the thing, maybe the machine that you are installing on the land, the installation, when they were installing it, they charge some amount. You need to include it. Professional fees. You have to employ a professional who would give you advice that buy this type of machine, do this. What do I say? Professional advice. You have to pay that person's advice. And that is also part of the word cost. Dismantling and restoring sites. Dismantling. So let's say after constructing the building in say 10 years time or 20 years time, you would have to demolish that building and clear the land. What maybe it's for 20 years, 10 years useful life. So at the end of the 10 years, 20 years, you have to dismantle it, clear all the sites as it was before you used that land. What I said. So you have to clear all of them. And this dismantling cost is a future cost. What I say, it's a future cost. So now, if you want to know the cost today, you have to discount this cost using the discount rate. You have to discount this cost. What I said, because this dismantling cost, I'm building. I want to know the cost today. So if I want to know the cost today, which I want to know the dismantling cost, if I'm clearing the land in 20 years time, in 10 years time, let's say how much will it be? So let's say it's 40,000. 40,000 is as at that future date. That is as at 20 years or 10 years. I want to know that amount today. So I have to discount that 40,000 into the present value. So here, time value of money comes in, right? You are going to discount that amount into the present value. So that is where time value of money comes in. So you discount it using the rate, using the what rate or the discount what factor, using the discount factor. I believe you remember the discount factor, which is 1 over 1 plus r exponent what n. Do you remember this discount factor? Do you remember this discount factor? Are you with me? Hello, I want to hear from you. I'm speaking in the air all this while.
Yes, please.
Yes.
Yeah, yeah. So 1 plus r into bracket minus n is also the same as what 1 plus r into bracket minus what n. So that is a discount factor. We have a discount factor for a single amount. What I say? For a single amount. So remember that dismantling and restoring sites, you have to discount into the present value because that is the cost that you incur in the future. That is the cost that you incur in the future. You see, and then the borrowing cost in accordance with IAS 23, borrowing cost. When you go and borrow funds from the bank to finance that project, is it the interest that is on the loan? You'd have to capitalize it to the what? To the cost of the what? PP or the cost of the asset. Or the asset. Items that need not to be part of the cost include or the above must be expensed. So items that need not to be part of the cost include cost of opening a new facility, right? Cost of opening a new facility. How does that concern our cost for this product? Cost of opening a new facility. I want to know the cost of product A. You are telling me the cost of opening a new facility of product B. It does not concern me. You cannot add it. You cannot capitalize it to the cost of product A. Cost of introducing a new product or service, including cost of advertising, promotion, and blah blah. Initial operating losses. Initial operating losses. You are when you started with your production, you've incurred some losses. Maybe you want to try the machine, right? When you bought the machine, and then you made some samples, or maybe in your first operation, let's say in your first operation of business, you made some losses. You want to add those losses as part of the cost of the product? No, that is not allowed. So initial operating losses before assets reach its planned performance cannot also be what capitalized. It must be what expensed. Cost of relocating or reorganizing parts or all of an entity's operation. Cost of relocating or reorganizing. Anything that is not relevant, that does not hold or is not key to the property, that does not directly relate, directly attributable to the product, should be expensed. We should expense it. So we should send it to the P&L expenses and not bring it to the cost, like the cost and the non-current assets. Then we are going to add that amount. When you say capitalizing, you are going to add that amount to the non-current asset side. By expense means you are bringing it to the profit and loss expenses. You get it? Yeah, the expenses side. And then administration and other general overheads, they are all expenses. So note, all the above must be what? Expensed. All the above must be expensed. Expense means so you either capitalize, you either what? Capitalize or expense. You either capitalize or what? Expense. So when you capitalize means you add it to the product cost as a cost, as a non-current asset, as a PP. But then when you expense, it means it is not directly attributable to the product, so let's expense it as a normal expenses. So initial operating losses, cost of relocating, administration general overheads, cost of opening new facility, blah blah blah, and the rest. So let's take an example. Let's take an example and see how it goes. Let's take an example. So who will read for us? Someone should read for us.
Example 1.1.
Mention your
SNA
name before.
Irabuna.
Okay.
SNA Limited is installing a new plant at its production facility. It has incurred the following costs. A. Cost of plant, into brackets, cost of suppliers invoice plus taxes, 5 million. B. Initial delivery and handling costs, 400,000. C. Cost of site preparation, 1,200,000. D. Consultations used for advice on the acquisition of the plant, 1,400,000. E. Interest charged paid to the supplier of plants for deferred credit, 400,000. F. Estimated dismantling costs to be incurred after 10 years, 600,000. G. Operation losses before commercial production, 800,000. Assume a discount rate of 5%. Required. Advise SNA Limited on the costs that can be capitalized in accordance with IAS 16.
All right. So the requirement is advise blah blah blah. Advise SNA Limited on the cost that can be capitalized in accordance with what IAS 16. IAS 16. So we want to know which expense, which of the costs can be added as part of the what cost, and then which of them should be expense to the P and L, right? Which of them should be what expense to the P and L. So let's go through them one by one and know which of them that need to be what expense and which of them that need to be capitalized. So cost of plants, cost of suppliers invoice plus taxes, 5 million. Should it be part of the cost of the um, assets or the plant? Is it part of the cost of the plant?
Yes.
Cost of plants, 5 million. Is it part? Should it
Yes.
be capitalized? Should it be
Yes,
capitalized?
please.
Yeah, so capitalized. Then initial delivering and handling costs. Should it be capitalized? Should it be
Yes, please.
capitalized?
Yes.
Okay, capitalized. Cost of site preparation. Should it be capitalized as part of the cost?
Yes,
Yes.
please.
So capitalize. Consultant used for advice on the acquisition of the plant. Should it be
Yes, please.
capitalized?
Yes, please.
Are you sure?
Yes.
Consultant used for advice on the acquisition of the plant. Why are you saying
Yes.
so? Why
Because you
yes?
need to hire a professional.
You
Hiring
need
of
to
a
hire a
professional.
professional.
Yes.
So when you hire a professional, you add it to the cost.
Yes, please. Because you pay him.
No.
I go. Hey, someone said no. Did I hear no? So interest charges paid to the supplier of plant for deferred credit. Interest charges paid to the supplier of plant and deferred credit 400. Should it be capitalized or expensed?
Expense.
Expensed.
Why expensed? Why capitalized? Why expensed? Did anyone say capitalized?
No.
No, expensed.
Expense.
Okay, so why expensed?
The interest is in the form of like discount, and discount is not supposed to be capitalized.
Okay, I see.
Am I
All
correct?
right. Yeah, you are correct. So, interest charges paid to the supplier of plant for deferred credit, right? So, deferred credit means you are supposed to pay your debt today. You are supposed to pay. Hey, did I say you are correct? I didn't really get what you said, but I just want to be. I just want to move fast. What did you say, please?
I said the interest charges is like it's in the form of discount,
Uh-huh.
and discount is not supposed to be capitalized. Like it's not supposed to be added.
Hmm. I don't think that is the meaning to that. But then, so the interest charges paid to the supplier of the plant for deferred credit. Let's say, um, you are supposed to pay 10,000 cedis, 10,000. You are supposed to pay 10,000. The 10,000 that you are supposed to pay, you have pleaded with the person, and the interest on the 10,000 is say 1,000. Now, instead of you to pay the thing today, you have deferred it. You've told the person that no, please, we meet you in 2 years' time. And if that is the case, let's say in 2 years' time, then the interest I'll charge you is no more 1,000. I'll charge you the interest of say 3,000. So that 3,000 interest that you are paying, should we classify it as part of the cost? Is it relevant? Is it directly attributable to the cost of the plant? Is it directly attributable to the cost of the plant?
No,
No.
please.
It is not relevant. It's from your own, should we say, negligence. One go to I don't know. I didn't. You have to pay it, but you have decided not to pay it today, and you are paying it in the next, is it 2 years or 3 years? So that cost is your own cup of tea. What I say, it is not. It does not concern us. So this should be what expense, because it is not relevant. It does not directly bring or relate to the assets. What I say, for the assets, the working condition of what of the assets, and then estimated dismantling cost to be incurred after 10 years. Should it be capitalized or expensed?
Capitalized.
Capitalize.
Capitalized. Should be capitalized. But then
Yes,
the amount should be what? Discounted, right? Do you remember that? It's an dismantling cost. Future cost is what? 600,000. So if you want to know the present amount, then what do we do?
Discount.
We discount it into the what? Present value.
Present value.
Why are voices so far from the microphone? And then we have operation losses before commercial production. Should it be capitalized or expense?
Expense.
expensed.
Operation losses before commercial production. Should it be capitalized or expense?
Expense.
Expensed.
Expense.
Expense, because your losses, operating losses, doesn't concern us. You have made your own losses. It is not relevant to the cost. So advice is a nail limited on the cost that can be capitalized. So what is the advice that you are going to give us a nail? So SNA Limited, amount to be what? Capitalized. The amount to be capitalized, cost to be capitalized. We have the cost of the plant. What is the cost of the plant? That is 5 million. So we have brought 3 zeros at the top. So we have 5,000. We have 5,000 here, right? We have 5,000. We have 5,000 here. And then initial delivery cost. What is the initial delivery cost? Is 400,000, right? Yes, we have 400. Cost of site preparation, 1,200. 1,200 capitalized. Consultant used for advice on the acquisition of the plant is one consultant uses 1,400, right? And then we have what else? The estimated discounting amount, right? Or dismantling cost, which is the 600,000 divided by the one. So that is, let me write it here. So that is the 600 all over 1 plus, what is the rate? Assume the rate of what? 5%.
5%.
5%.
So 0.05 exponent
10.
10. Someone can also say 600,000 into bracket 1 plus 0.05 minus 10. You should all get the same answer. So what are you getting? What are you getting? Are you getting same amount there? What are you getting? Hey, what are you getting? Are you getting the same answer?
Yes, please.
Hello.
Yes, the same answer.
Okay. All right. So can we proceed?
Yeah, yes, please.
So the total cost will be what? What are you getting for the total cost?
Mm, 8,368.3.
Total cost is 8,368.3. Let me call. Let me see if you had that. Okay. So that is the what cost. That is the cost that will be what capitalized. So it means the other one that you didn't choose would all be what expense. So which one did we? Okay, we have already even indicated them. So this will be expense. This will be what expense, right? That other one to be so to go to the P and L, right? So that you didn't would be what expense. Now, what is the finance cost or the own discount? When you discount the present the future cost into the present value, you would arrive at this amount, right? This is the amount of the present value amount. This is the present value, PV, the present value. This present value, there is a discount on it. So the finance cost, the cost that you incur on the present value, the cost that you incur on the what present value would give you the what finance cost or the own discount. Own what discount. So what is the own discount or the finance cost? Finance cost. So finance cost sometimes when it's loan, we say that the interest on the loan that you incurred. So interest on your loan, interest on loan. That is what your finance cost. So here the finance cost would be 5% of what the discounted amount. So that would be 368.3, 5% on it, and that will give you the 18. So that will give you the what 18.42. So that will go to the P and L. That is the rate, the discount amount 5% times the 368.3. Now, if you want to know which amount will go to the non-current liabilities, non-current liability, because that amount is actually what a liability. So that would be 368.3 plus the finance cost plus the what finance cost. So the finance cost alone will go to P&L as an expense. I believe interest on loan goes to the P&L as expenses. Interest on your loan is an expense. So that's the same way the finance cost is also an expense, which will go to the P&L. The total liabilities will be what? The present value, which is the 368.3 plus the finance cost. Or you cannot say that this 368, which you find in the what is the future value formula? Future value is what? Present value. Is it present value? Present value 1 plus R, right? 1 plus R. So that is to say that this 368.3, if you discount it like this, using this, you are going to get a what? Same amount, like 386.72. And that will go to the statement of financial position. That will go to the statement of financial position. We can also look at the depreciation. So this question did not ask for depreciation, but some question might say that find the consumption of the economic benefits or the depreciation. Depreciation cost. Depreciate. What is the formula for depreciation? Cost over what? Cost over the useful life, right? So when there is scrap value, you deduct the scrap value, then over the useful life, estimated useful life, right? Estimated useful life. So what are you getting? So here we have no scrap value. So what cost did we get? What is the cost that we had? We had this cost. Total cost is what? 8368.3. 8368.3. So that would be 8368.3 all over. The useful life was 10 years. So that will give you the depreciation amount, which would also go towards state profit and loss. It will also go to the profit and loss. So that would also go to the profit and loss. That will go to the profit and loss. So that is that for example 1. Any question? If there is no question, then we'll move on to question 2. So reader, please read question 2 for us.
Question 2. Kofi Limited started construction on a building for its own use on 1st April 2013 and incurred the following costs: purchase price of land 250,000, land registration fees 5,000, legal fees 10,000, site preparation and clearance 18,000, materials 100,000, labor period 1st April 2013 to 1st July 2014 150,000, architect's fees 20,000, general overhead 30,000, total 583,000. The following information is relevant. 1. Material costs were greater than anticipated. On investigation, it was found that materials costing 10 million had been spoiled and therefore wasted, and a further 15 million was incurred as a result of faulty design work. 2. As a result of this problem, work on the building ceased for a fortnight during October 2013, and it is estimated that approximately 9 million of the labor costs relate to this period. The building was completed on 1st July 2014 and occupied on 1st September 2014. You are required to calculate the cost of the building that will be included in tangible non-current assets addition.
So what's the answer? Reader, please, what's the answer? Irabna.
Yes, please.
What's the answer? Hey, Irabna.
9 million. 9 million.
That's 9 million. I see. Okay. All right. So, what's the requirement? So, first of all, let me look at the requirement. What is the amount of what? You're required to calculate. You're required to calculate the cost of the building. That will be what? Included in tangible non-current asset addition, right? So, additional information has also been provided. So, let's go. Purchase of land. Should it be capitalized? or expense. Purchase price of land, is it part of the cost of the asset?
Capitalized, yes.
Land registration fees, should it be capitalized or expense?
Capitalized.
Hey, are you the only person in the class? Where are the rest? Land registration fees, should it be capitalized or expense?
Capitalized.
Capitalized.
Legal fees, legal fees, legal fees, should it be capitalized or expense?
Expensed.
Why expense? Why expense?
And because it's like sort of like an amount you should pay for, like, should I even say like form of taxes? Yeah.
Please speak loudly.
I said like it's sort of like taxes. It is in a form of taxes that you should pay. Like it is obligatory for you to pay.
Mm-hmm.
So it's an expense. Since it's not like how would I even say it, sir? The English is not coming. Oh, okay.
Anyone to assist, should we capitalize or expense it? Legal fees. Mary, should we capitalize or expense it? Mary, should we capitalize or expense it? Okay, Pamela, should we capitalize or expense it?
Capitalized.
Why capitalize?
Um,
Why
it
capitalize?
is directly attributed to calculating for PP.
Are you okay? So legal fees should be capitalized as well because you pay that legal fees and it's part of your cost, right? You are mandated to pay it. Yes, that is right. Import duties, you pay it. You pay your import duties. It is in the law that you have to pay your import duties. So if you pay the import duties and you add it, the legal fees is also like the import duties where you pay for it. It is mandated that you pay for it. So it needs to be capitalized. Site preparation and clearance. Site preparation and clearance. Site
Capital.
preparation and capitalized. Okay. Materials. Materials. Materials used in your production. Should it be capitalized
Yes.
or expensed?
Capitalized.
Capitalized. Capitalized. Capitalized, right? And then um what else? Labor capitalized as well. Architect fees capitalized. General overheads capitalized.
Expense. General overhead. I think that's an expense, but yeah.
So let's move on to the additional information. What does additional information say?
Say, say coffee. Can't hear me.
General overheads to
Yeah.
expense, right?
Yes.
To expense general overheads. So additional information. Reader, please take us through the additional information.
The following information is relevant. 1. Material costs were greater than anticipated. On investigation, it was found that material costing 10 million had been spoiled and therefore wasted and a further 15 million was incurred as a result of faulty design work. 2. As a result
Okay.
as a result of this problems, work on the building ceased for a fortnight during October 2013, and it is estimated that approximately 9 million of the labor costs relate to this period. The building was completed on 1st July 2014 and occupied on 1st September 2014. You are required to calculate the cost of the building that will be included in tangible non-current assets addition.
Okay. The materials cost were greater than anticipated, right? On investigation, it was found that materials costing 10 million had been what stored. So are they saying there, what do we do? Something that
Please, I
has
have
been
a
stored.
question. So please, I
Yeah,
have a
please your
question.
name. Your name.
Please, I'm called Augustina.
Okay. Augustina, your question.
So please, can you go over the main difference between the capitalized and the expense?
So capitalize means add.
So like with the examples, I'm getting confused as in why we some are expense and some are also capitalized.
So should we use this example? Where you
Yes, yes, please.
around when we so we capitalize when that expense it's directly attributable to bringing the assets into a working condition. It is directly attributable to bringing the asset into what a working condition. So if so this one like this, let's go back to I think the previous one. Mhm. The cost of bringing the assets to a working condition. So um, this one like the cost of the plant. Yes, that is the price that you purchase the asset. That is 5 million. Initial delivery and handling cost. Cost of bringing the assets into the business. Delivery cost and handling costs 400. All this must be added. Capitalized means you are keeping it as cost of the asset. You are adding it as part of your cost. You see, IAS system that does not allow you to certain does not allow you to add certain costs, certain expenses as part of your cost. So things like, let's say, initial initial losses. You are making initial losses, and you are saying that you want to add it as part of your cost of the plant. Cost of the plant, you are adding the initial losses so that your cost will go high, so that you're getting higher cost of the plant. You would think that you purchased it so high, but if we go through, you can see that certain items are not relevant, are not directly related to the asset, but you are intentionally adding it as part of your cost. So you can see that cost of plant, this one is actually the purchase price, so that one can be accepted. Initial delivery and handling costs can be accepted. Cost of site preparation, yes, you have to clear the site. And if you don't clear the site, can you continue with whatever you are going to do? No. So that is also relevant. Consultants used for advice on the acquisition of the land. When you're going to get the land, someone advised you, you went consultant fee, consultation. You went for consultation, and that you have to pay something. So that amount that you paid, you have to capitalize it as part of the cost, so that you know that, and if you can cost, that one is also part of the cost. What I say, interest charges paid to the supplier of plant for deferred credit. You are supposed to pay your supplier today. You have intention. You are telling the supplier that, oh, I'll pay in 2 years time, and the supplier say, if you pay in 2 years, then your interest will go high. You give me 3,000. They say, okay, don't worry. I know I'll add it to my cost. I know I'll add it to my cost. So medium family, if you say 3,000, no problem. I'll add it to my cost, so that my cost of the plant will increase in the books, in the financial statement. ISC still is telling you that no, you cannot. This item cannot be capitalized. It can only be expense, but it cannot be capitalized as part of your cost because it was due to your within negligence. Yes, and you not paying that amount. You not paying that amount. That's why you are incurring that cost. It is not relevant to the cost, to the product that we are talking about. Cost of the product plant. And then you have the estimated dismantling cost, which that one, the amount given here is the future amount, 600,000. If you want to get a present amount, you discount it into the present value using the discount rate. Then operation losses, that one you are making losses, and you want to add the losses as part of your cost. Now, so that your cost in the books will go high. No. IAS system is saying that no, don't do that. If it's losses, bring it as an expense. One more car. Losses, expense. Don't go and capitalize it. So that's why we are separating the capitalization from the what expense. Requirement says advise SNA Limited on the cost that can be capitalized in accordance with IAS 16. Do you get it now, Augustina?
Yes, please. Thank you.
Welcome. So with this one, it is the general value that we didn't capture, we expense it. All the rest are relevant. But let's go to the additional information for the I. Materials costs were greater than anticipated. On investigation, it was found that materials costing 10 million had been spoiled and therefore wasted, and a further 15 million was incurred as a result of faulty design work. So something that is spoiled, look at the books. How much were we having as materials? How much are we having as materials? How much are we having?
100.
How much are we having as materials?
100,000.
100,000. 100,000, right? So the 100,000 that we are having as materials, no. They're saying that 10,000 have been spoiled. So it means this is not the true value, right? The true value is how much? What is the true amount? What is the true amount of
90,000.
the materials? What is the true amount? 90,000. So it means you are going to deduct the 10,000, which is fault. What that's there. That is the first. You are going to deduct the 10,000 that is fault. The 10,000 that is what? Fault. So that's what you are going to do. Before we come to so we are going to deduct what? The 10,000. And then a further 15 million was incurred as a result of faulty design work. So it means if you are making faulty design work, because of faulty design work, you are incurring some losses. Losses of how much? Losses of how much? Losses of 15,000. And you've added it to the 100 million. It means that the 100 million is not the true value, and you have to deduct the 10,000 plus what? Plus the 15,000. So what do you have?
105,000.
What do you have?
15.
$75,000.
So that's 75,000. 75,000. Well, we are deducting the 10,000, which is fault, and also a further 15 million was incurred as a result of faulty design design work. So you, because of your faulty design work, no, that was due to carelessness. So you have incurred additional costs, and that all those cost was included in the 100,000. You have to deduct it to know the actual cost, because we will not accept that losses. That is that IAS system is saying that you have to expense it. What I said, you have to expense it. And your hand is up.
So what then happens to the 25,000 that we have deducted?
Is that what happens to the what?
What happens to the incurred loss? What happens
Yeah,
to that? Become an expense now.
yeah, it becomes an expense. So we expense it in the P&L. Do you get it?
Yes, I do. Thank you.
I'm sure she gets it. Welcome. And then, so the second one is what? Act 2013, and it is estimated that approximately 9 million of the labor costs relate to this period. The building was completed on 1st July 2014 and occupied on 1st September 2014. As a result of these problems, work on the building 6 ceased for a fortnight during October 2013. And it is estimated that approximately 9 million of the labor anyway, 9 million of the labor costs relate to this period. So if the work ceased for this period, fortnight, and it's estimated at 9 million. So that 9 million cannot be capitalized. Cannot be what? Capitalized, because there has been a cessation of what? Of work. So I think we'll talk about this when we get to the borrowing cost, capitalization of borrowing cost. So there has been a cessation of what? Work. So that 9 million cannot be accepted, because that time a juma be and cost under borrowing cost. Said when business ceases, then borrowing cost also what? Ceases. So here there is no active work. Therefore, that 9 million part of the labor cost should be what? Expense. Do you get it? So that 9 million will be expense. So it means that 150 million here would deduct 9 million from it. But at the end, and this one too, I think we deduct 25,000 from it, right? What else? Is there any additional information on that? And then, so that's so. The building was completed on July 2014 and occupied on what? 1st September 2014. If I'm asked, when does depreciation start? When does depreciation start? Like depreciation of the assets. When does it start? Anyone to try? When does
The end of the
depreciation
period.
start?
At the end of the
The end of the period? At the end of the period. Your name? Who is that?
Yes, please, Prime Minister.
Your name.
I'm Ibrahim.
And you're saying at the end of the period. Okay. Anyone?
At the beginning, like the moment the assets, the moment you start using the assets.
The moment you start using the assets, then depreciation starts. Good. Any other? Ibrahim, you too. Good. Any other? Any other? When does depreciation start?
The moment you start using it.
The moment you start using the assets. Oh, okay. One last one. It's Rebecca here. Rebecca, when does
When the
depreciation
asset is put into service.
is
When
put
the asset
into
is put into, like when you start using it, when the asset is put into use, yes.
into use? Okay, I see. In Rebecca, when do you start? When does depreciation start?
I said when you start using the assets, the moment you start using the assets.
You said that, right?
Yes.
Oh, okay. All right. I see. Okay, so depreciation actually starts when the asset is ready for use, not when the asset is put into use. When the asset is what? Ready for use, and not when you occupy or start using the asset. So look at here. The building was, can you see here? The building was completed on 1st July 2014 and occupied on what? So someone would say that from what you guys were saying, you were saying that when you start using the asset, it means the depreciation will start from 1st September 2014, and that is wrong. Depreciation should start on 1st July 2014, because that is when the building was completed. So if I construct a building, now me the building no our site or me call here. You say, oh, the building is there. 2 years I have not been there. I said, no matter, I'm not prepared. I'm not buying the stuff. What I said. Then the building is there 2 years, 3 years, 5 years. Are you telling me the building will still remain as it is, as compared to when it was constructed from the beginning?
No.
Will it be the same as that?
No.
Yes, it will depreciate even if you have not started using it. So depreciation actually starts when the asset is ready for use. Immediately that you hear that the asset is completed. That's all. When the asset is was completed, then means depreciation must start. So you see what they brought here. The building was completed on 1st July and occupied for on 1st. So someone say yes. It means they actually started using the asset on 1st. Then you see that we depreciate the asset using the month pro rata basis, using this month. Then that would be wrong. So depreciation should actually start when the asset is the intended purpose is accomplished. The intended purpose is what? Accomplished. I want to use the asset for this and I'm done. I've completed the asset. Depreciation starts 1 day, 2 days about so depreciation what I say. So that is here they didn't say we should compute for depreciation, but then some question would say that find the consumption of the economic benefits. That's the same as the depreciation. Consumption. Your depreciation is what I share, sharing that is the depreciable amount over its useful life, right? Depreciable amount over its useful life. So sometimes instead of them to use they will say consumption of what fixed assets, consumption of the assets is the same as the depreciation. It's the same as the depreciation. So that's the same thing, right? That's the same thing. That's the same thing, right? All right, so let's. So did you get 5,159,000? That is, if you follow. So the general overhead will be expense, right? And this will be capitalized. The next question, what's at the time? 5:30. Let's solve this question quickly. Let's solve this. Let's solve it. Read and read.
Example 3. On January 1st, 2016, 𝒂𝒓𝒕 acquired production equipment in the amount to 250,000 cedis. The following further costs were incurred: delivery 18,000, installation 24,500, general administration costs of an indirect nature 3,000. The installation and setting up period took 3 months, and a further amount of 21,000 were spent on costs directly related to bringing the asset to its working condition. The equipment was ready for use on 1st April 2016. Monthly managerial reports indicated that for the first 5 months, the production quantities from this equipment resulted in an initial operating loss of 15,000 because of small quantities produced. The months thereafter show much more positive results. The equipment has an estimated useful life of 14 years and a residual value of 18,000 cedis. Estimated dismantling costs amount to 12,500. A relevant annual discount rate to use in any discounting is 10%. What is the cost of the assets? What is the cost of the assets, and what are the annual charges in the statements of profit or loss relating to the consumption of the economic benefits embodied in the assets, assuming year end December 31st?
Okay. So you find the cost of the assets, right? And then the annual charges. So um, okay. Can you see my whiteboard? Can you see my whiteboard?
Yes.
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 See my whiteboard. Oh, okay. 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 All right. So, what is the question asking? The cost of the assets. So, first of all, the books of that example. What?
3.
Okay. So, cost cost of the assets. Cost of the assets. I believe you can see my board, my writing board. Can you see my writing board?
Yes, we can.
Okay. All right. So, what is the initial cost? What is the initial cost of the asset? Initial cost. What is the initial cost of the asset? In the question, the question said Zarafat, right? I'm sure Zarafat. Zarafat. Zarafat PLC. PLC. Zarafat PLC. So on 1st January 2016, Zarafat PLC acquired production equipment in the amount of what? 250,000. 250,000. 250,000. 250,000. That is the initial cost. So what are the other directly attributable costs? Delivery. Delivery cost is what? 18,000. Do you have any additional information on delivery? Any additional information on delivery? Nothing on delivery. So the delivery is what? 18,000. Delivery is still 18,000. Delivery 18,000. What else? Installation. 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 Installation amount is what? 24,500. Any additional information on installation? The installation and setting up period took 3 months, and a further amount of what? 21,000 were spent on cost, right? So it means that the amount you are saying 24,500, there has been a further 21,000. So the installation becomes how much? So let's say 24,500 plus what? 21. What do you have?
They put 5,500.
Come again.
45,500.
To 45,500. 45,500. Then general administration cost of indirect nature. Are we to capitalize it? Are we to capitalize general administration cost? Hello, are you following? Are we to capitalize general administration cost?
No.
So we skip that one. And then they said the equipment was ready for use on 1st April 2016. Monthly managerial reports indicated that for the first 5 months, the production quantities from the equipment resulted in initial operating loss. Are we to capitalize initial operating loss?
No.
No. The months thereafter show much more positive results. The equipment has an estimated useful life of 14 years and a residual value of what? 18,000. So the useful life is what? 14 years. Residual value 18,000. Estimated dismantling cost amount to 12,500. A relevant annual discount rate is used in any discounting is what? 10%. So let's find the estimated what? Dismantling amount. Estimated dismantling amount. Estimated dismantling amount. Dismantling value. So what is the amount? So that would be 12,000. What is the amount? Is it 12,000? Estimated dismantling cost is what? 12,000. So that is 12,500 all over what? The discounting amount, which is 1 plus, what is the rate? 10%, right? So 0.10. Number of years is how much?
40.
So that's 14 years. And that will give us what?
Uh, 3291.640679.
32,
91.
32, 91.
91.
Give me a
point-
whole number.
No, it's a decimal.
Run it to a whole
Decimal.
number.
Okay,
You
3291.
give me a whole number.
92. 3292.
So that is it. Any other cost? Any other cost? So there is no other cost. So therefore our cost, total cost will be what? Total cost will be, give me the total cost. Give me the total cost.
316,792.
300 and what?
16,000.
316,792.
792.
So this is our cost, and Then we do our workings. I say action for depreciation as well, which is the annual depreciation or the annual charges in the statement of P&L. Annual charges. Depreciation is an expense and it goes to the P&L. So that's what they are saying, the annual charges in the statement of P&L. Finance costs would also go there, remember. Remember finance costs. When we discount, we get finance costs. When you discount into the present value, it results in a finance cost, right? So now, let's talk about the workings. So the workings. So here, let's do for the depreciation. So for the depreciation, what's the formula for depreciation? Cost minus what?
Residual value.
Residual value or the scrap value
Over estimated useful life.
over the estimated useful life. Over the estimated useful life. Life. Alright, so what is the cost? We've already computed the cost. What is the cost? 316,792 minus what is the residual value in the question? They said the residual value of what? 18,000. Can you see the 18,000? 18,000 all over the estimated useful life. Useful life is for 14 years. So what becomes our wait? Did they? I think we would have to look at the prorating as well. Let's see. The installation and setting up period took 3 months, and a further amount of 21,000 were spent on costs directly related to bringing the asset into a working condition. So when did they buy the asset? When did the depreciation start? When did the depreciation start? Let's look at when the depreciation started. When was the asset ready for use? When was the asset ready for use? The equipment was ready for use. The equipment was ready for use on which date? 1st April what? 2016. They say we should assume that it ends on what? 31st December, right? 31st December. So April, you count your fingers. 1st April means April is part. 31st April means April is not part. 31st April means April is not part. So we begin at March. No, April, May. So May. By this one, it's 1st April. So it means April is part. So April, May, June, July, August, September, October, November, December. How many months?
9.
9 months. So it means the depreciation is not a full year depreciation. It is 9 months worth depreciation. It's a 9 month depreciation. So 9 months depreciation. So that will give us times 9 out of the 12 months. Times 9 out of the 12 months. So you have to be watchful on when the asset was ready for use. When the asset was ready for use. If there was nothing like that, we would have computed a full year depreciation. That is a 12 over 12, which is still 1. But here the asset was ready for use on 1st April. It means from 1st January, February, March, 3 months. January, February, March. It means the asset was not ready. So depreciation hasn't started as at that period. Right? Depreciation hasn't started as at that period. They started from April, May, June, July, August, September, October, November, December. So what do you have? What do you have?
The screen isn't. It's not showing.
Sorry? What do you have?
16007.
So I'm getting what?
16007.
That is the depreciation. Finance cost. Finance cost. That is the what? Rate given. 10% to 10% times the discounted value. What is the discounted value that you computed? Present value. That was what? That is 3292, right? 3292. 3292. So 3292, right? So this is, so what do you have for the finance cost? Prepare the statement of P&L. Expense. Depreciation. Depreciation. What do you have for depreciation? 16007. Finance cost. What did you get for the finance cost?
329.2.
Three two 329.2.
0.2.
Are you? What else? Then general expenses. Do you remember these general expenses? General administration cost of indirect nature. 3,000. Can you see that? General admin expense is 3,000. You are going to expense it. You are not going to capitalize. You are going to expense it, not capitalize. Is there any expense to be expensed? Any cost to be expensed? Initial operating loss 15,000. Initial operating losses. How much? 15,000, right? 15,000. What's the total?
34,336.
34,336. Then I can preparing the statement of profit, statement of financial position. statement of, did they even say we should prepare that? What is the cost of the asset and what are the annual charges in the statement of profit or loss relating to the consumption of the, okay. So they didn't say we should prepare the, but let's assume they say we should prepare. Assume they say we should prepare that statement of financial position, extracts. All these are extracts, right? They are not the full statements and statements, financial statement that you know, right? They are just extracts. It doesn't come out with everything. So it's an extract. It's an extract, right? So assuming they say we should prepare the statement of financial position, then non-current assets, non-current assets, non-current assets, PPE, property, plant, and equipment. See, what did we get? Cost. What is the cost? What was the cost? What was the cost? Three one six 792. Cost minus so cost. What is that depreciation? Depreciation is how much? Depreciation is 15007. So what would be the net book value? What would be the net book value? What is the net book value?
Uh, 300,785.
300,700.
No, actually,
700.
300, 300,785.
300.
785.
300,785. 785. So that is the PP. So PP, right? And then liabilities, non-current liabilities. Non-current liability, we have the dismantling cost. Dismantling cost, the non-current liability. Future liability, right? But we are discounting into the present value. So what's the present value for that? What's the present value for that liability? That is is it 32, I remember, is it 3292? Yeah, 3292. 3292 plus the finance cost. Plus the finance cost. So the finance cost alone will go to the P&L as an expense. But when it comes to the non-current assets, it is the summation of the present value that you discounted, the present value amount that you had after discounting, plus the finance cost, plus the word finance cost. So that is 329.20. So what is the dismantling cost? What is the dismantling cost?
36
36
21.3.
21.2. So this is the extract. They asked us to prepare statement. If they ask you, this is how you are going to do it. To know that the dismantling cost will have the discounted amount plus the finance cost. But when you go to the expense, it's just the finance cost. The finance cost which will come here. So that is it. So that is the answer to that question. So go and try question 4.4. Go and try question 1.4 as an assignment. So I'll be waiting for your answers in my DM. Any question? Any question?
No, please.
Okay. So if there is no question, then on that note, we shall call it an evening. Thank you very much for coming. Enjoy the rest of your evening. Bye.
Bye.